Welcome to Alpha Wolf Trading. Did you know that there's over 12,000 stocks or companies that trade on the OTC? Between the Nasdaq and the New York Stock Exchange, you have over 7,000 companies. But us as retail investors, we wouldn't know that unless we were researching. Because why? Wall Street focuses on the elite, the big companies. And where the retail investor has their advantage is in small and micro-cap stocks. Why? Because you have the opportunity to speak directly with leadership. That is what this is all about here at Alpha Wolf Trading. We're trying to find the hidden gems, and we interview the executive teams of companies that we think meet the parameters to be those hidden gems. I also want to make sure you understand that this is not a paid-for promotion. I collect no compensation for the interviews I do here. These companies that I interview have been identified as potential opportunities for me and the members of Alpha Wolf Trading to receive a higher than average return on our investment. These companies I have identified either because of a technical setup on a chart, a fundamental change within the organization, new management team, new products, all kinds of different things that actually lead me here. But what do I think is the most important? Leadership. And that is why I do these interviews. I want to understand what drives the person that is leading the charge. I want to feel their passion. I want to understand their vision and the strategy that they're going to use to achieve success. That is what these interviews are for. I want to understand the share structure and the cap table, the size of the TAM, the total addressable market. This is the opportunity to learn all of those things. So sit back and enjoy. And if you learn anything from today's interview, do us a favor. Subscribe to the Alpha Wolf Trading YouTube channel. Hey everybody, Tim from Alpha Wolf Trading coming at you with another CEO interview, and this typically would not be something that I would be compelled to dig deeper into, but that changed when I met this gentleman, Trent Ward. Trent is the CEO, founder, visionary of company Interactive Strength Inc., which is also doing business as Forme, which I have up on the screen, Forme, and their ticker symbol is TRNR, trainer, on the Nasdaq. And they went public. When did you go public, Trent? How long ago?
End of April.
April. Okay.
Early May. Yeah.
So it's a very interesting concept. I think we could both agree that you were right. You were cutting edge. You were, I think, maybe ahead of the game. But things, because of COVID and the way things fell, it didn't really quite work out for you the way it could have, right? Trent, first of all, I want to thank you for coming in and sharing your story. I think it's a good one. I think your history is a big reason of why you and I are talking right now. But maybe what you could do is give the listeners a little background on you, who you are, and how you got here, and then we can take it from there.
Definitely. Great to be here, Tim. I appreciate it. Thank you. And no, life is not a straight line. I started my career doing M&A at an investment bank. I then spent almost a decade at Citadel running a long short equity portfolio. So been in the public markets for a long time, fundamental investor, understand all types of businesses. And in my, sitting on my non-compete before going to another fund, I got into some different little businesses and became an entrepreneur. And the one that really got me excited was this idea of digitizing strength training. And so this is 2015, 2016. I had an idea. It was a side thing, right? I was going back to work. It was just sort of a fun project. I when I was an undergrad, I got an engineering degree. I got a finance degree as well, but and that was
Where did you go to school, Trent?
I was at University of Pennsylvania, so Wharton undergrad and Penn engineering. I was in a program. There's 50 kids a year called Management and Technology, where you get 2 bachelors in 4 years. And so I've always been a math science person. My mom was a math professor, and I liked that. But when I got into doing business, it was a lot more exciting. So I did my engineering degree, but I went into finance. And but I've always been a problem solver, and I like to figure things out. And I started working out at home in 2014, 2015. I started working from home because I left the office. I was at Citadel 2006 to 2014. And I'd always been an athlete. All the stuff you do as a kid, right? Nothing. I played high school sports. I wasn't. I didn't go to college to play sports, but I captained the wrestling team, played football. Was close to being an All-American wrestler. All of those type of things. And when you're an 18-year-old guy, you lift weights and you try to get as big as possible, and it's a certain thing. In your 30s and 40s and 50s, you're training for something different, and you're training for not falling apart, right? And longevity and picking up your kid and doing things like that. And so I came back to weight training and I started working with a personal trainer. It was my girlfriend's, who was living with me. Her trainer came to the house and I was working from home. So it sort of seemed strange for me to go to a gym at that point. And it was a real, eye-opening experience of just how efficient it was to work out at home, how great it was to not have to think about it. And that strength training wasn't just about getting big and playing sports, but this allows me to eat more, drink more, live longer, all these great things. And yet you talk to people about weight training and they have an image of a big dude with muscles, right? And it's, I think all the research and conversation around longevity that's around now, and everyone's sort of saying, hey, this lean muscle mass strength training thing is actually the biggest driver towards longevity. So we were sort of on that path of how do you make strength training more consumable? And it was, exercise is hard and people don't like to do it. And it's always an excuse. So if you got to get in a car and drive somewhere, that could be good because you have social connection and that may be a driver for you, or it could be a friction because of just the time. For me personally, it was time. Being able to do it at home made it easier. Doing it on my own schedule helped me fit it into a busy day. And having a trainer there that was providing, expert guidance and motivation and accountability, was great. And so I basically said, how do you digitize this? And that was make a digital strength machine. So remove the weights and put in a motor, make it look good, right? So when this is off, it's a mirror that looks nice. And then put a trainer in the screen that's live, that can see you can see them, but don't pay, big city pricing, right? I was living in London at the time. I used to live in New York. And I think we all learned in COVID, you can work out with a remote trainer, a virtual trainer. You put that person in a lower cost area like Texas or Florida or Nevada, you can pay them something that makes them happy and it fits a lot better. The other real part about it, other than the economics, if you want a trainer that's good, when you want to work out, call it 8 a.m. or 5 p.m. or whatever it may be, they're going to be busy. Because if they're not busy, they're not a good trainer, right? In the same way, you don't want to go to a restaurant Friday at 7:30 p.m. and have it be empty. You want the one that you can't get a table and they go, oh, Tim, over here, sir, right here, right? Being full is the definition of good. When you're talking about something like a restaurant or a trainer, we take a trainer on the East Coast who at 11 a.m. doesn't have a client for the right reasons, because there aren't clients then, but it's 8 a.m. in California on the West Coast. And so we sell it in that way. And so we create high quality inventory, and we put it into from low quality inventory, right? Bad time slot. We sell it in a high demand time zone. We have labor market arbitrage. We put the trainer in a different geography. And then we have, we don't have rent and overhead and all that. We have digital distribution, not physical. And so I've now put a full weight machine in your house that looks good, that's controlled by someone else. I put your coach. When you're not home, it follows you around, all your workouts and your coach through your iPad or your phone. This is now, personal training that fits around you and does all the things you want. So big, complex business, lots of things. To what your point, Tim, we weren't in production on the hardware when COVID started, which meant it took longer and was more expensive, and we didn't get all that demand. And missed the COVID boom, but on the other hand, also didn't go down that path of spending an enormous amount of money on marketing, expecting the market's going to continue to do that, and hiring lots of people, and kind of blowing yourself up, right? We sort of saw this happening, and we said, how do we make money here, right? This is a business, and candidly, having money cost something is a good thing, because everything I learned at Wharton implied money cost something. In the world that I was in the past 5 years as an entrepreneur, was like, why are people doing that? It was perverted, right? Like the whole system was screwed up, and people did stupid things, but that was what you had to do. Now there's discipline, and it's great, right? It makes it better because we have a real value prop. But the other thing we realized is there's money to be made by selling best-in-class equipment and great personal trainers to affluent people. And there's no money to be made in selling to people that aren't affluent, right? And I think that's part of the problem here is you can't try to sell to unprofitable customers. So we focused on how do you make as much money as possible from the fewest number of people. Our recurring revenue per user on an annual basis is 3 times what Peloton is or other competitors. That's a much better place to be, because you're making 3 times as much money for the same customer, or you're getting to the same level of revenue and you have to acquire 2 fewer ones, which saves you a lot of money. So that's kind of where we ended up. Both the original vision, definitely some challenges in there, and how we think we've sort of come out the other side with a business that is a tech platform that's set up for success. And going public early, beginning of commercialization, right? We finished in production or development, started shipping, and we went public then with basically no revenue, because we said this should be built in public. This is the right place to access capital. It's the right thing for the market. But we're a young company at the beginning of the journey, and I certainly believe that we're going to be a very big, valuable business eventually, and people get to join in the beginning, right? So there's a lot of, I'd say, unique angles here that end up getting passed over, as you almost did before you sort of dug in and learned more about kind of the things that are going on. And I'm excited to talk about all those things, but obviously, we announced something as well that
So let's
might be a little more current for you.
You just talked about reported earnings, which were there's nothing really to boast about there. Not unexpected, but then there was an announcement that was quite, or could be quite, transformational for the company, and in my view, on terms that are exceptional.
Thank you. I agree. I think it's a very good deal. And I've spent a lot of my life working on deals before, so this is something that I feel pretty good about and comfortable doing. We are buying another business. We're at the LOI stage, but look, we're in exclusivity. There are a number of things in that, in the transaction situation, that I am very confident in getting it done. There's work to be done, but we are I've been working on this for a number of months. Frankly, conversations with this company started last year. And it was, I think, something that always made a lot of strategic sense. The other founder of that business and I have talked over the years. And I think once we went public, I think two things happened. One is we went public, and two, the trajectory of their business changed for the better, for the positive. And when we were looking at this, it said, look, you put these two things together and you have a pretty exciting business immediately. I had been talking about for Forme and the existing business, we have profitability in 2025, right? Not a certainty. It was a projection and something that we hope, but we're early in our commercialization journey. This combination puts us profitable next year, probably, right? Like, it is tens of millions of revenue on a combined basis. We take a lot of cost out of the business because there's a lot of overlap. And we're cash flow positive definitely next year, and we're probably, we're making money on the EBITDA line as well. And we have immediate scale in every one of our functions. There's only one CEO now, and there's only one of this, and there's only one of this. And so it's a deal that is exciting, and it pays for itself on cost synergies alone. There's a big earnout component. So, I think we're taking very little risk on the future. The price changes based on what they deliver or what that product delivers in terms of revenue for us next year. That means we're always paying about a 1.1 times multiple on sales, and they have good gross margins. And the other part, almost all of their equity is being rolled into our equity. Right? No one's walking away here with cash. This is a true partnership that all the numbers stack up great. Now, the other aspect is they're primarily B2B, and we've found that B2B is the best place for us to be. We're early in moving towards that. Consumers are expensive and hard to get to. We still have them, and we'd have the affluent ones, but the real demand pull that we're seeing in the market is through B2B. And these guys have one of the best distributors out there who love the product, who are doing a great job, and pushing our product into that distribution relationship, I think, can really deliver a lot more growth. And it's all variable based selling, right? It's not, I'm hoping to market and get some customers. It's, no, we pay you when you sell something. And that's a much better profile of a business than let's go spend a bunch of marketing and hope people click on it. The moment Facebook or Google change, the algorithm, you're screwed, right? So I'm I'd say thrilled with my business hat on of we're self-financing when this is done, and we have some scale. As a operator, I'm excited to have a new distribution partner that really helps and solves some of the problems that we're going through as a young business. And I think from a signaling perspective, whether we get credit for it today or next year, I think it'll be very clear to the market that we know how to do deals, and there's a lot more out there to do. And I think that we'll be able to say we're the first profitable business in this segment that's, kind of direct to consumer hardware or fitness hardware, connected hardware, any of this stuff out there, right? Peloton's not profitable yet. Tonal's not. Mirror wasn't. We would be. And I think that goes to the reality of today's environment, right? It's not okay to light money on fire anymore, as it was for those other guys. But it's also how I was raised, right? It's what I know. It's like this is the whole point. You need to sell more than you spend.
So when you were first brought to me, and I just thought about the model, when COVID happened and Peloton went on its tear, in my head, it was like, this is it. This is just going to be a matter of time before this comes back to earth, right? This bubble is going to pop. And there are multiple reasons for that. I mean, number one, people every year, New Year's resolution, I'm going to start working out. They go sign up at the gym. They work out for 2 weeks. They do pretty good. And then guess what? They stop going to the gym because life takes over. Or they buy a treadmill or a stair stepper or whatever you want to call it. And they put it in the house and they start out, they really strong for, maybe a month. And then it becomes a big coat hanger or dust collector. I mean, that's just the reality of it, right? And when I was thinking about this business here, I was thinking the same thing, right? But here is the difference for me with your equipment. Number one, at the very least, if I stop working out, it's still a damn good looking mirror. Right? And
you can find less expensive mirrors, but yes, I agree. It is a good looking mirror.
It's a good looking mirror, man. I mean, I won't feel like such a chump because I still use it every day. Right? I mean, I won't feel like such a chump if it.
Are you saying you spend a lot of time looking in the mirror?
Yeah, I say that. No, at least I will look in the mirror though, and I'll feel like it's a good looking mirror. I didn't waste my money, and as opposed to using it as a coat hanger, right? I think that your whole business model. Here's the deal, Trent. The business model itself probably wasn't the most attractive thing on the planet to me. I think there's other things that grab my attention more. However, the real key here, the key element is Trent. I tell everybody all the time that you can have a great product, you can have a great service. If you don't have great leadership, I think the odds are stacked against you. Okay. Especially when it comes to Wall Street. Now, you just said something a minute ago about the ability to do your own financing. You don't need an investment banker at this level of where you are. Why? Well, because you were an investment banker and you understand how that whole thing works, right? You can do your own deals. That, to me, is invaluable. So as you and I just talked before we started recording here, one of the things I said to you is that I don't know what your business looks like 2 years from now. I don't. Maybe it's still the mirror thing and it's working like a charm. Maybe there's no mirror at all anymore. I don't know where the business goes, right? But here's what I would be willing to bet on. Whatever it is, it's going to be worth some money. And that's going to be because of who's running the show. Does that make sense?
I appreciate that. And I'd say I'd be willing to bet on it, but I clearly already have, right? I put a good amount of money into this and I spend a lot of time on it. But I don't know if I told you this. So we never had a VC investor. The first 30 million I raised for this business was from 300 people, friends and family. So I never got a big VC check or anything like that. I had lots of conversations with people that knew me and trusted me and wrote me checks. Right? I'd say you're not alone with that kind of view of, sure, this sounds good, but I know you're going to do your best and you're capable. We can't control the future, but here we are. And I would have said that my background, like at that time, I'd be like, yeah, of course you're going to invest in me. It's a good idea. I'm a smart guy. I did these things. But when I look back on it, the difference between getting to this point and not, it actually wasn't to do with my education or my experience. Persistence, right? Like, and you sort of realize it's actually just getting up and going every day and keep pushing and having a lot of energy. That's the difference in entrepreneurship. You need the other stuff, but COVID recaps, delays, all that stuff, getting public. Like, I know a lot of smart people. It's about just not giving up, right? And grinding it out. And that's something I hadn't fully appreciated when I started this. I didn't think about whether I had it or not. I didn't necessarily understand how important it was. But now when I do my angel investing, and I think it's really just about that, is like, are you going to suck it up and do the job or not? Right? When it comes down to it. It's funny because all of this sort of stereotypical quippy motivational speeches and comments you get from your football coach and your wrestling coach have come back to my head. And as humorous as those all are, like, a lot of them ring true to some extent. This is about hard work and just grinding it out.
I mean, ultimately, that is what it comes down to, right? But I also think that you have to have, change happens quickly, and it's going to happen even more quickly as the things around us get smarter and smarter, right? So I look at, you can say that your education, none of that, a lot of it, everything plays into where you are today, right? Life's experiences. You haven't made, and you're the first one to say it, you haven't made all the right decisions. You've made mistakes, right?
I've made many more mistakes than anything else. I mean, it's a long list. I don't want to go through it all. We don't have the time, and also, frankly, it'd be, I'd much rather tell you about all the mistakes I made after our stock's at 100, right? And be like, oh yeah, it's really hard.
Well, I mean, here's the thing. You said it at the beginning, and this is a very common trait with a lot of, I would say, good CEOs, is the ability to identify something that's not working or broken or a problem, and then finding the solution, right? Fixing things. That's a very common trait for engineer type minds, really. They like to create things that solve problems, right? You kind of got a lot. You've got that, and you said engineering, finance. I mean, you kind of got it all wrapped up. Plus, you're just such a charming guy. Right? That.
I mean, you joke, but I'd say one of the biggest things I've learned since I left the hedge fund industry and Citadel and all that, I'm out in the real world now. People matter a lot, right? And getting people to do what you want them to do, and they're not rational, and they're not, they don't operate like you do. It's a whole new playbook I've had to learn, and it's a motivational skill, likability, like all these things that you sort of think don't necessarily matter that much, or I didn't. They matter, and I hadn't appreciated that, right? And like getting a deal done. So we're buying this business. I presented to their board. I visited them. Like, it's courtship. It's all of this stuff, and like they're handing their baby over to me on very nice terms, right? Because they trust me, and because I was able to develop a relationship and give them the confidence to do that. They could have just taken the all cash offer that they had sitting next to it, right? That's the art of the deal there, right? That's the stuff that isn't in the spreadsheet. At least in the deal world, I've been doing that a long enough time. But I, without a doubt, going through trying to manage a business, starting it, all of our mistakes, everything really enabled me frankly, to give them the confidence that, I'd already made the mistakes. I know what I'm doing, right? Like I have experience, and that's something that I didn't have before. I had theory. And now, the reality is this business is a lot more revenue than our business, right? Like it's the bulk of it. I made a joke to a friend the other day. I said, I left finance, started a company. I did all these things. I took it public. I bought another company, and I'm just back to being a finance person because the thing I just bought in a public shell is actually, where a lot of the value is, today from a revenue perspective. But the entrepreneurship journey arms me with a toolkit to know who's a good manager and who's not, to see businesses and see risks, before you step into them. Because I have perspective that I didn't have before. So it's interesting. I have a child now who's almost 2. I'm seeing the world again for the first time through her eyes.
Congratulations.
Thank you. It's better than they ever told you, by the way. But I'm thrilled about that. And same thing with the career, and like I'm kind of back to doing what I was doing, but with a much more nuanced view of things. I think that adds a lot of value. So there's a rebirth of some sorts in some respects. I almost feel like I'm getting to have another career again, but not having, but benefiting from everything I've done before. So it's super exciting.
Yeah, I would say you're a young guy, Trent. You're what? I mean, I know it's not politically correct to ask, but I would say you're probably in your early 40s, right? Maybe somewhere in there. You're a young man. You got a long way to go. And I think, like I said, things are going to change rapidly. You recognize that the change needed to happen. I don't think you were heading in the direction that you exactly necessarily wanted it to go, right? And you've made a change. Now, I know it's an LOI. We'll see. I'm confident you're going to get the deals done. Then you have a whole new company, really, essentially, right? You go from where you're at today, which is less than stellar. I mean, it's just not. I'm a straight shooter, but you know where you want to go, and now you've got those pieces together. So there are a couple of things that happened recently. You also had a partnership with the golf company, right?
Yeah,
offering golf training, right?
So we work with Titleist Performance Institute. These are the best golf coaches in the world, and our device fits perfectly for golf type workouts as well, right? Lots of rotational stuff, everything, but having that coach is super important. These guys coach Phil Mickelson, John Rahm, all of this, right? Every player on the tour is coached by a coach, and this is more body mechanics, not your swing, right? This is more golf fitness. Everyone has a coach who's gotten a certification from Titleist Performance Institute. Now, what I'd say is, I have a lot of confidence in the destination of where our business is going and our product and in our industry. The thing I don't know is how long it's going to take for us to get there, right? It's a win, not an if for me. And the thing about win is it also means how much capital, right? And you get there earlier, good things, you get there later, bad things. And so when we were looking at the business and saying, where are we most successful? Golfers, right? Like less than half the cost to acquire the same customer, because it's really clear. You want to hit the ball further? Yes, I do. Okay, cool. Buy this, right? Much easier to sell than fitness, and more affluent and all those things. So many people in fitness, like, I need to burn calories, and anyone that knows anything about fitness is like, that's not what it's about, right? It's golf. It's about hitting the ball further and playing longer, right? So it's an easier sell. The other part of a business where we're having a lot of success is B2B. So selling into multifamily, buildings, other stuff like that. And when you think about accelerating any of those channels, you need capital, you need to do these things, as opposed to raising money to go out and try to sell more and pay for the operating losses while we're getting to scale. I was like, well, I can buy a business that gives me cash flow. It's like, it is a tree that grows money, right? Because it keeps kicking it off every year. That gets us to self-financing. It buys me all the time I need to execute on the vision that I have lots of confidence in. I just don't know when. But at the same time, it gives me a B2B distribution platform that allows me to accelerate what I'm doing. So it's like a puzzle piece. This is the thing that fit perfectly, that sort of addressed and solved all the problems. It didn't mean that I don't believe in what we're doing, and it doesn't mean I don't think it's been successful, but it reduces risk. It improves the optionality on that, and it makes it better. And that's what a deal is, right?
And it sounds to me like it creates a win-win.
100%. And I can tell you the story of why they do it, right? And you never want to force someone into a deal. You don't want to take the last cent. Buying something for less than it's worth is good, but at the end of the day, that's not what a business is. It's more like a child, right? You own it and you gotta keep it. You can't just sell it. So you need something that compounds and grows, so you can get a multiple on it. You can't just say, well, I bought this thing for 10 that's worth 12 and therefore I've gained 2. It's no, I bought this thing and I've managed what the risks look like so that all the paths in the future actually create more value than what I'm gonna pay. I mean, on a cash basis, we've paid for this whole deal in 18 months. I mean, I think we can all do the return on capital on that one, right? Like, we're buying something for less than 5 times earnings once you include the synergies. And these synergies aren't like pie in the sky. This is like literally like, I don't need 2 of those same things, right? Because we're both smaller businesses, it's fine. So, we're paying less than 5 times basically EBIT.
What will your share structure look like after this is all said and done?
Sorry, I missed the first part.
What will the share structure look? How many shares will you have outstanding after it's all said and done? Fully diluted, do you know?
No, meaning it depends on what kind of revenue they generate next year, right? There's an earnout. So we're paying, we're assuming some debt, we're giving them some equity, and then we're giving them more equity in the future depending on what revenue is next year on 2024. So we won't know for a while. The point is, we're always going to be paying about 1.15 times next year's revenue.
Okay.
So that's basically a fixed multiple. So they will get more stock, but at the same time, our stock should go up. So I think the earnout actually won't change it much if you assume the multiple on the company is similar. I'd say the real driver to how many shares we will issue to them is where our stock is when the deal closes, because that's when you choose the ratio. So if our stock's high, it's not that much. If our stock's low, it's more. But I think it's probably they're going to own lots of caveats, lots of things. Who knows? But 20 or 30% of the business probably going forward. But the important thing is they're all locked up for a year, and remember our pre-IPO shareholders are locked up for 18 months from IPO. We didn't do a 6-month lockup because we knew we needed time to develop the business before the market could support any secondary liquidity. So there's no equity coming to the market from any of our shareholders, these new ones or existing ones, until literally November of next year.
Okay.
So
how many shares outstanding do you have currently, Trent?
That's 14.3.
14.3, which is, anything under 100 million, I consider to be small, right? So 14.3 million shares. And this transactions. There's a couple of things that I want to highlight on the fact that, and make sure people understand. You are focusing on with this program B2B. So like Four Seasons would be a good example of that.
But also, Equinox, Lifetime Fitness, Planet Fitness, all, gym chains.
Okay.
So bigger orders, more visibility, no marketing expense.
Right. Of course, you have the individual clients, but that's not necessarily, and you said it earlier, you're not just going to throw a bunch of money at social media and hope that people click on it, right?
You will not see us spend a bunch of money on professional athletes, maybe a basketball player or something. Might use a golfer, so I'm not going to say, but like it would be very targeted for a specific reason. But by and large, that's not the strategy.
That's the strategy, right? You want to have a top quality product, which you built, right? I mean, there's the mirror.
Design built everything.
Oh, you're right. Design built, and there's nothing else out there that's even remotely close in quality, right? And when you're talking about it, I mean, the trainer in the mirror, I mean, it's an interactive mirror. This is a very technical piece of equipment, right? You can see them, they can see you. Very cool stuff, right?
It feels like they're there with you.
Right. So, I mean, like you said, you haven't given up on this concept. The concept is you just don't know when it's going to get there. And I think maybe you're early still, but at some point it's going to get there, right? And you're not looking to go into everybody's home. You're looking for a very specific clientele, right?
Top 10%, right? So about $250,000, $200,000 household income and above, of which there's 4 million households in the U.S. Right?
Which is a nice chunk of revenue, right? I mean, you're very focused. It's not
very focused. Yeah. No, it's the other thing is, if you're over the age of 40, the risk of injury, or maybe the cost of injury, is greater than the benefits of exercise to some extent. Like, it's basically negative compounding returns. You take that big whack in your portfolio, you never really recover. It takes a shit, you're down 50%, it takes 100% to get back to where you were. Mm-hmm. Same thing. If you're out of commission for a few months because you get injured, you're already losing muscle mass because you're over the age of 40, but you lose it faster and it's hard for you to gain it back. That permanently sets you back. So our customers tend to be older because they're richer, and having someone that's watching them and not them doing it on their own is a big thing about not getting injured, right? It's sort of the first do no harm. But it's the number one driver to longevity, strength training, right? Lean muscle mass. But if you do it on your own, you get injured, it's bad. And that's why people go stand on the elliptical, because it's easy, but it's not the right answer.
Right. Right. Strength. I mean, there's one thing about burning calories, right? Getting on a treadmill or whatever, but strength is, I mean, for your bones, the muscles, I mean, everything. That's really one of the most important.
It's not even one of it, literally the most important. Like, if you want to maintain your independence and have a successful 6th decade, 7th decade, 8th decade, the number one requirement's basically muscle mass, right? You can be overweight, but if you have muscle, you're fine, right? So the problem is, everyone thinks about exercise as weight control, and the reality is diet, right? So if you work out, you're going to burn 300-400 calories, right? So you work out 30% more and you burn an extra 100 calories. If you have a 2,000 calorie diet and you overeat by 5% or have a snack, that's more than 100 calories. Like, people just don't understand that weight control is diet. Exercise is making sure all your stuff continues to work well. And sleep's the most kind of important thing on top of that. But look, there's something called a centenarian decathlon. What would you like to do when you're 100? In fact, what would you like to do when you're 70? Do you want to lift up your grandkid? Yeah, most people say yes, right? Like, I haven't met someone that says no, but that's basically a squat and a press of 30 pounds. Can you do that now? Yeah, sure. Okay, cool. By the way, this is the decay rate of muscle mass kind of over the next 20 years for you. You won't be able to unless you do something about it. And when you put it in those terms, do you want to be able to walk up an 8% hill without, running out of breath? I do. I want to, do you want to be able to carry your grocery bags? Do you want to be able to put your suitcase in the overhead bin? Everyone says yes. And it's like, you need a VO2 max of this. You need to be able to do this. You need to be able to do this. What can you do now? And what's the path? And when you show them that they're not going to make it, the conversation is no longer about, well, what's the scale say and how many calories am I eating? They're like, oh, wait a minute, I have a different reason to train. I want to, and so that's the conversation that's starting to happen. And look, well-educated, affluent people already know this shit. We've been talking about longevity for a long time, right? When you're rich, what do you want to do? Live longer. Right? And so that's the thing. By the way, when you're poor, you're not thinking about that. You're thinking about, how do I make it to the next day, right? And I'm not trying to be crass about it, but like, just your priorities are very different, when you're in different economic brackets. Longevity is a massive focus. The number one thing you can do for yourself is exercise, and primarily strength training. And how do you do that most easily? With a great personal trainer in your home, right? Like, you don't see old rich people going to the gym, right? Because they're at their home in their own gym, like, it's funny that, like, garage gym or basement gym has a kind of a grimy kind of connotation, right? You sort of think squat rack and all this other stuff, but man, having your own home gym, that's luxury, right? Like, it really is, so having your own home gym and a personal trainer, look, I don't think there's anyone that can argue convincingly with me that personal training doesn't work. Like, I think it works. I think people pretty much know it works, but there's some challenges to it. It's really expensive, and you got to find the right person, and there's scheduling and this. So what if I said that I took this thing that works and I made it 50% less expensive and more convenient, and you could trust my brand and my quality? Are you talking about the gym being closed or COVID at that point? Because I'm not. I'm talking about taking something that works and making it more affordable and more accessible, which, as far as I've understood business, is a really good way to make money. Make something that less expensive and more available that works. I'm not trying to find product market fit on personal training. Right? I'm not trying to change behaviors. I'm trying to make something easier and trying to say something that works for less. So that's kind of one of those things. I know it works because, by the way, it takes a long time to get someone to start, right? Even my mom, it took her a while.
Let me ask you a question. The personal trainers that you have, do you have a set staff of personal trainers that they work directly for you, or are they like contracted out to you, 1099 contract?
So they're hourly employees. So they're employees. We train them. The thing with 1099 people is you can't tell them to show up at a specific time in a specific place.
Okay.
Right? The Uber driver accepts the job. That doesn't work with this. You want the same person all the time. You don't want a random trainer showing up, right?
Right.
You want the guy that knows you and knows what you did to your shoulder 5 years ago and blah, blah, blah. So they are hourly employees, totally variable cost, right? We don't really have a fixed cost in carrying them. We have about 50. They are all successful trainers in their own right. A lot of them came from Equinox, like during the pandemic, but they all have clients. Think about, if they don't have a client, just like a restaurant, if it's not busy Friday night and Saturday night, it's not a good restaurant. There's no debate about it.
Right.
If this trainer isn't busy at 5 p.m. or 8 a.m. or 9 a.m. or whatever, they're not a good trainer. But not being busy at 2 p.m. and not being busy at 11 a.m. is no mark on their skills. It's just there isn't demand in a market for that. There's no, if you can afford training, you're rich. And if you're rich, you want to work out when you want to work out, which is before work or after work, largely, right? There's very few people there's very little demand in the off peak. So you have an inefficiency where you've got the trainer that is of value, and yet there's no market for it, right? But there is a market if you make it virtual and put it out to a different time zone to where there is demand. Right? So this is,
That's another win-win. I would call that a win-win, right? The client gets a good quality trainer at a less expensive price because maybe it's in a different market, right? And it is, a slow time for wherever that trainer is. So it's just a win-win all the way around, right?
it's actually a win-win-win because we make money. But no, it is a win-win.
It's like a win-win-win, right?
Yeah,
I mean, wow.
we're a platform, we're a marketplace in some respects. We've created an environment and a platform where you as a trainer, if you're good, can make money when you wouldn't otherwise make money. And you as a client can find a high quality resource that's less expensive, and you don't have
I don't have to buy the mirror to become a client, though.
We do it through mobile.
I can become a member of your service and do it through my laptop if I wanted to, right?
We are hardware agnostic. Now, we have the best hardware and I think it's great, but like candidly, some of our clients are really rich and have amazing gyms, and they just either put their iPad there or they put just our mirror, right? And they don't actually buy the device, the equipment. But even regardless of whether you have it at home, what the situation is, like I travel all the time. People who are affluent travel, and I don't want to have to like figure it out on my own. I get my iPad in the gym and my trainer shows up.
Right.
And when I'm not there, I have his workout that he programmed for me that I follow on my own time. So like, and same thing. I don't know what time I'm going to free up today, but there's a workout that's been designed for me sitting on my machine upstairs that my trainer made for me that I'm going to go follow. It sets the weight, tells me what to do, all that stuff. But I'm not figuring it out on my own. I'm doing what he wants me to do, but I do it on my own schedule.
So this is the strength mirror, but and I think it's important to highlight, you've got more than just the strength mirror. You've actually got, we already talked about golf. I also saw, it looks like ballet training, right? You got the pole for
the bar. Yeah, so we have a bar. Tim, a pole is for something different. It's vertical, I mean, I know you're in Vegas and all, but the pole is a different thing.
Oh yeah, that's right, the pole. Yeah, that's that's for a whole different industry.
Yeah. By the way, that's a good industry too. The problem is, there's non-peak demand. There's no non-peak demand with that one as well, but it's much harder to make it virtual.
Right. That's true. That is true. All right. So look, you can get the mirror by itself, and then you can get these different configurations for different workouts. But I think more importantly, and it is beautiful. I mean, it is a beautiful mirror.
Honestly, you'll see it and you'll just be like, this thing is incredible. But by the way, it's not that expensive, right? If you finance it right now, it's like $125 a month.
Right.
A training session is going to be, $65 to $85. Like the thing is, people don't appreciate that about half the profit in most gyms, or almost all gyms, is personal training. So I think it's more well known that like the business class seats in an airplane pay for the rest of the plane, right? Like I think people kind of understand that, that's why the plane flies. The economy is just sort of along for the ride. The gym, most of it's PT. It's only 10% of revenue, but it's 50% of profit because it's about a 50% margin business, and the rest of and a normal gym is like a 10% type business. So literally it's 5 points from training and 5 points from all the other, like, in effect, rental of goods and space.
Funny, people talk about the social element, and maybe I'm different, but I go in, I want to work out. I want to get on the machines I want to get on. I want to get my workout in, and I want to get out. I'm not there to socialize, right? I'm there to work out, and I want to get that done as efficiently as possible, right? And I think most people are that way. I mean, they go in.
You're going to get both, right? Like sometimes like on a weekend, my wife and I may go do a physical activity together. But during the week, I'm not trying to coordinate my schedule with her schedule. I'm too busy. I'm doing my stuff. I think there's a social element that is helpful, and it's really a good thing. And it's great that people like enjoy working out with other people. But I find it very hard to say that that's the be all end all when if you sit in first class, they do their best to give you as much space to yourself. And when you sit in economy, it's really communal. And which one do you prefer? Right? There's a reason the VIP section has lower density. People want their own space. Like, I think everyone has read an ad that says in the comfort of your own home. They don't say in the comfort of a bunch of sweaty strangers, right? Like, I'm sorry, I do not want to go wait in line. I do not want to share equipment. I do not want to do this. Like, call me a selfish asshole. At the end of the day, I'm working out for myself, right? And I want it to be as efficient as possible. And I want it to be personalized to me.
Right. And I agree with all of that. And
I'm a selfish asshole? I mean, Tim, come on. I mean, you don't know each other that well.
Listen, man, I think this story, look, it's a tough market right now. And I think you would agree with that, right? Small microcap stocks have taken it on the chin for roughly 24 months. And, everyone is concerned that maybe we're going into a recession. I am not of that view. I think we've been in a recession for a while. And I think that some of these companies are ridiculously valued. I think this announcement that you've had is a defining moment for the company, right? Maybe everybody doesn't get it right off the bat here. I think over time it'll become more evident, right?
I mean, look, revenue and cash flow eventually get appreciated and valued, so I take a lot of solace in that we have that, and we will have that, I guess, when everything's closed. As far as, look, I haven't been in kind of this micro cap, small cap world for very long. And I know that we're so early in our development as a company that, like, I have a lot of empathy for most investors because they don't know, right? They sit there and like, well, this thing doesn't have a lot of revenue. What's happening? Like, I'm not sitting here going, why isn't the stock higher? Like, it's a pretty thinly traded stock. Anyone that sells it takes it down, and there hasn't been a real argument of why to buy it. I think what we've announced is about as compelling as you can get, right? Other than a takeout or something else, but it's and I think people that understand that most quickly will make a lot of money, right? People that take a little longer make a little less, but they still make money. So I think it'll all work out just fine. Like, I'm not I'm not selling stock. No one else is. Like, the price on the screen is just last trade. I've been in the markets long enough to know things are overvalued sometimes and things are undervalued sometimes, and the last person buying or selling isn't necessarily the smartest, right, or the best.
Right.
But also, there hasn't been a lot of information out there, right? We haven't given guidance. Like, no one knows, so that's fine. I think this is pretty definitive and clear. And if someone disagrees with me, I'd love to debate it. But it's also not my job to convince everyone, right? It's there's always going to be detractors.
Let me ask you a question, Trent. You didn't start this business to fail, did you?
I did not, no.
Okay. All right. Have you really started anything in your life that you just have the intention of failing right out of the chute?
Obviously, no, but I'd even take it further. Have I failed in anything? And I'd say I've been pretty successful in everything I put my mind to it, even if it was harder than expected, and even if there were setbacks, right? And there's all, as I started,
right.
Life is not a straight line.
Stepping stones to success, right? I mean, that's what they are. The stumbling blocks, they could either be the thing that keeps you down, or they're the thing that you learn from and you overcome, and that's what makes you stronger and better. I mean, that's kind of how life works, right?
Muscle works that way too.
You're either a fighter or you're a quitter, right? I don't foresee you as being a quitter.
I've never quit anything in my life.
Okay. So I would suggest that your intent is to be successful. Now, we may be early on this story. I don't care about that. I like being early. I like starting to look at a company when no one else is, right? And thanks, by the way, for giving me the first interview off of this news announcement. I genuinely appreciate it, because when I look like a guru,
as you said, you dug into something that on the surface you didn't think made sense, but you put in the work and you uncovered it. A wolf is a lone hunter, right?
Well, that's true. There's the alpha, but then there is also, the thing I love about wolves is that they're loyal. Number one, they're very, very loyal to the pack, and they do hunt in packs as well. But then you have the alpha, right? Somebody's got to lead the pack. So that's what I love about wolves. That's kind of where that all came from. But I think that this is going to be a very exciting story. I think you're making moves. I think you're learning. I think you're making moves in the right direction. And right now, the market is tough. I don't care what company it is or what industry it is. For the small micro cap space, it's brutal right now. It's a brutal, and especially if you have any hint to need to raise capital, and that is not something that needs to be worried about here either, right? So you got good things all the way around. And I guess maybe what I would like to do, when is this thing going to be, when do you see this being completely finalized where you can really open up and talk about it?
So we'll sign the definitive documentation, the expectation is September, and we can have more details and the names and all that type of stuff. At that point, it's kind of done. It's binding and everything, and we have SEC stuff and some shareholder vote, but that's not really a concern. That's just time.
Right.
But it'll close in December, I would guess. But I think September certainly will have more, and end of the year will have more, and just.
So let's do this. Why don't we plan on, and I'll leave it up to you, man. But when you think there's the window is open that we can talk about things a little deeper and further, we'll have you back and we'll do a follow-up.
Sounds great.
Sound good?
Appreciate it.
And then just real quick, from a technical standpoint, look, the stock's in a downtrend, just made a new low. The way I view it is the story is still very early. It's developing.
You spread it this way, it actually gets less vertically down.
Yeah, I know. I can do that for you. But
look, they say that only monkeys pick bottoms, but I would hope that today is.
No, I've never heard that one before.
Never. That's like a standard stock market.
Oh, that's pretty good.
Listen,
I'm not telling anybody to go out and buy the stock today. I am telling people to put it on your watch list, right? Because I think, and pay attention to what is happening and what Trent and his team are doing over there at Forme, because I do think you're going to be pleasantly surprised. And you have email alerts too over at Forme, right? They can go and sign up for email alerts, right? So the SEC filings, all that stuff just gets sent right to their email. Perfect. That's what I'm suggesting to people. Go there, sign up, pay attention to the story, follow what's happening. I think good things are coming. I think you're going to see great things from Trent over time. And Trent, thank you for coming in and doing this, and we'll do it again real soon.
Sounds good. Appreciate the confidence. Thank you.
All right, man. Thanks. Hold on a second. I'm going to turn this off.
Thanks for tuning in to today's interview. Today we had Forme CEO Trent Ward. I hope you enjoyed today's interview, and if you did, do us a favor, give us a like. How about giving us a share? And while you're at it, why not give us a follow? Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.